Let's bring on someone onto the show who actually said quantum might have a little bit of trouble. Mr. Chris Patel. Chris, what's up?
Dude, I didn't think that this was gonna come like right after the
Should have bought some puts on it, man. We should have bought some puts.
I didn't even get a chance to look at like, okay, what is the value of buying some puts on this thing? No, it's just look, the point that I was trying to make yesterday wasn't that like, oh my God, I think quantum computing is fake or the technology is not real. Because I mean, there's clearly it's a real technology. Otherwise, Google and all these companies wouldn't be spending billions of dollars on it. The challenge is not everything is a viable business. You know, you have to make money at the end of the day. As shareholders, you expect to get a return. You know, so I get it. Like some people, they want to be invested in an industry that's brand new because they think they're at the absolute bottom. Totally agree with that. But it's just about portfolio position sizing. So right now, let's say you were into quantum and it was only about 4, maybe 5% of your portfolio. That means you're down 2.5% today. Whatever, big deal. Not to really care. But if you're like 20, 30, 50% of your portfolio was in quantum names and you have to take a 25% hit, so your overall net worth, that's a big problem. So my intention yesterday was just to say, look, the more speculative something is, the less of a portfolio position it should be, just to be on the, just to be on the freaking safe side of things. So I don't know, whatever. Like I said, everyone buy whatever you want to buy. A lot of these companies, especially when they're pre-revenue, they're not making any money whatsoever. You're really betting on some big long shots. So whatever money you're putting into them, make sure it's money you can and you're willing to lose.
Yeah, and I think one of the parts of growing up as an investor, which I've learned as well, is the pre-revenue names, pre-earnings names look exciting based on potential. The problem is if you're a public company, it is very important for investors to publicly see your numbers. And if you have no numbers and you're a public company, then you're just a story. And sometimes the story can win. Sometimes the story can turn into like the best numbers in the world. But a lot of times the story is not as good as it seems. And it dupes in a lot of people. And that's why I've never had FOMO over the past year, because I had my FOMO in 2019. I've had that phase. That phase is done.
And the thing is, like, if it's a real business, you'll see it starting to generate revenue, starting to generate profits. And the thing is, like, once it's that level, then you can start putting in more and more money into it, because then it's like, okay, yeah, I believe in this thing. The challenge is when it comes to like late stage market, sometimes people go a little bit ham on the next big thing because they're looking for that. I mean, it's just a normal part of human nature to say, I don't want that company that grows 5, 10, 15, % every year. I want that company that's going to 1500x in 6 months.
And what do you mean by late stage? You mean as in there's a little bit of overextension?
So when you look at markets, there's usually like different stages. Usually, you start off at this like bear point where everyone is just like, the stock market is for stupid people. Like, I'd rather just keep my money in the bank. Like, I don't want to lose my money. And then it kind of like slowly graduates into more people getting into the market. And what ends up happening is businesses and capital allocators, they recognize this. And what happens is when things are really, really on the speculative side, when there's a lot of people that get into the market that aren't really basing their investment decisions on the business outcomes of that company or that industry. They're basing it on basically just the assumption that things are going to be good in the future, or this is a future technology. That's when you'll see all these companies IPOing. They're SPACing. I mean, you remember in 2021, we should have recognized this when there was a company that said they were going to do energy storage by moving blocks from like the top and then taking it and then moving it down. Remember that was going to be energy storage? Yep. Like, just like now I think about it, like I look back on it and I'm just like, man, was that freaking ridiculous or what? Or companies that were doing like the scooters, right? There were like 24 scooter companies that were launching. And then when you went on the streets, you saw all these scooters just being thrown around everywhere,
Yep.
So it just comes down to, is it a viable business? And if it's not, then like a company like Palantir and stuff, it's not, they've got real revenues, they've got real customers, they've got real growth plan. Do I think it's overvalued? Yeah, I think it's overvalued. But at least like if you are risking a good chunk of your portfolio in a company like Palantir, you know that it's a profitable company and eventually you'll make money on it.
Yeah.
So for me, I'm trying to maximize my gains, and I'm a little bit of a swing trader too. Like, so it comes down to, hey, if I find that there's a value in a company, I'll buy into it and I'll buy pretty heavy. So my thing is, if I don't necessarily see like the full value of it, like when I buy a company, I don't like, how like the types of money I throw at companies if I think it's going to do well.
Yeah, you go heavy.
So, and it's because I actually develop conviction. So if I don't have conviction in something, I just don't put a lot of money towards it.
So that's actually a really good lesson I've learned from you. So this is what I was trying to get at AMD in the morning. I don't know anything about AMD, but I know a lot of people. I was actually on the phone with Sebastian over the weekend, and we were talking about AMD, and you know him in private equity. And he was like, dude, the problem with AMD is everyone's getting into it, and no one actually knows anything about AMD. I mean, there are some people that really get it. There's other people that are just like, oh, it's a smaller NVIDIA. And so if you put real money, we're talking about, at least 5-6% of your portfolio into a name and have those positions, you are forced to learn about that name, and you can then have a real sizable position. But if you just throw some money at it because you think everyone's buying it, you might not know why they're downgraded today.
I mean, I tend to, before anything, what I do is I look at the entire sector, right? And I say to myself, okay, is this sector, like, what are the intricacies of this sector that I need to understand before I even start to look at the company itself? Because if I don't understand how the sector makes money, I don't understand how the company makes money. Is that a fair thing to say? Like, look,
it's a very fair thing. Yeah.
Right. So the first thing we have to analyze when it comes to AMD is, okay, how does the sector make money? Well, they design advanced chips. They do research and development. They figure out how to make chips faster, better, and they're actually able to utilize these for applications, right? So then you go there and then you look at who are the market leaders. Like, of the chip makers that are out there, who are the market leaders? And then you find the company that you think has the most promising one, and then you look at the valuation, and then you just kind of drill downwards. Like, so here's an example with semiconductors. Semiconductors, in my opinion, one of the main challenges is they're cyclical. You think semiconductors have this, up into the right business model? No, they have times where they're feasting, and then they have times where there's famine. Like, AMD is down almost 50% because it was up to what, almost 200 at one point.
220.
Right? 220. So it's down 50%. If that's not cyclicality, then what is it? So a lot of times what happens is people get overly bullish at the top, and then, they got to ride the wave down. And now you need AMD to go up 100% just to recover.
So what are your thoughts on this 10-year at 4.7, and how do you think the market's dealing with it?
Okay, so there's a little bit of positive news when it comes to the 10-year right now. Okay, if you want to go to my Twitter real quick, just check out the thing that I posted. First of all, look, it actually is retreating. It was up almost 30 basis points, not 30 basis points. 30 basis points this morning. Right, so it was up almost like to 472 at one point, 4.72. Now it's down to 4.69. Go to my Twitter post and I'll show you something very interesting.
This one?
Yeah. So the numbers that go to the other one, the one I posted. Okay, this morning I was like, okay, let me take a look what is going on with these jobs numbers, because they look super bullish, like in terms of like there's a lot of jobs. Now, one of the things I noticed is that in August they did a huge revision. Remember, 800,000 jobs lower than they had originally projected, right?
Yeah.
So when you look at the area where they had the most amount of revisions was in professional and business services, right? And then you had leisure and hospitality, but leisure and hospitality is a little bit harder because you don't know what's going to be like seasonal hiring versus like what's long term. But with professional businesses, you can get a pretty good understanding. So in August, when they did this report, they revised down 800,000 jobs. Almost half of them came from businesses and that. So then I looked at the current data that just came out. Which sector do you think had the highest growth rate over the last 3 months?
I would say professional business services.
Right. Look at that. So scroll down. Look at that giant upward tick. You see that? So whatever methodology that they are using
Is bullshit.
it's bullshit. It's bullshit. And my wife is calling. Give me 1 second.
Yeah, you got it.
I'll-
I can mute
So
you.
now, if you look at, if you go further up, right, you're gonna see. Scroll up. Okay. No, keep going up. It's the newest post, right?
Oh, okay.
So on the back of this, ADP just released a report, right? So click on that ADP report. So the way that the surveys are done is that the way that BLS gets their data is they actually go out and they just do surveys. They call
which is
people and
insane.
say, hey, what's going on?
It's insane
I
that
can't
that's
hear
the
you. Hold on,
methodology.
sorry.
Oh yeah, Chris, you can't hear me. Yeah.
Yeah.
You can hear me now? You're good?
Give me 1 second. There we go. I
You
think
good? You can hear me? Oh, you still can't hear me.
there we go. I can hear you now. Right. So if you look at ADP, right? ADP, they added 122,000 jobs in December, less than expected. If you look at the total number of jobs that have been added according to ADP, which actually uses real payroll data, you can see it's really flat. It's not actually growing. Okay. So there's actually, like, if you go to the next screen, like further down, like the next one that's right on there, scroll down. No. Yeah, there you go. So that's ADP's non-farm payroll. Look at that. Do you see any spikes anywhere?
No.
So where are these assholes getting these fucking giant additions from?
So you're saying the BLS survey methodology is incorrect in the context of the actual payrolls that ADP is looking at, and they're overstating jobs by what, a tune of a couple 100,000?
Dude, a lot more than that. So do you follow Liz Ann Saunders on Twitter? Yeah. So go to Liz Ann Saunders. One of the things that she posted was very, very interesting with the survey, which was the total number of people that are actually responding to this thing. So I think I might have posted it too. Yeah, it's in my post too if you want to look at that.
Okay, let me pull that up.
So you can just go to the one that has the and scroll all the way down. It's the next thread after that.
Yeah, lower survey response rate. Yeah.
Yeah. Look at that survey response rate compared to in the past. It was usually 60, 70%. Now it's barely 30% they're getting responses. So do you trust that data?
I mean, dude. Well, and even if this is not convincing enough for anyone, the fact that they revised in August by the tune of 500,000.
800,000.
Sorry, 800,000.
I'm telling you, it's crazy. So
okay, so the implication for the average investor means that we have way more unemployment than the market is thinking based on this data, which means rate cuts should be on the way, right?
Technically, yeah. Technically, that is the exact thing. So right now, the Fed is they're saying we're going to be data dependent. So the market is saying, okay, if the Fed is data dependent and the jobs report is coming out and saying that we have a shit ton of jobs, that means that the Fed is likely to keep rates relatively high, right? Yeah, so the rate cut expectations have been lowered from 4% cuts in September to now only 1.5 cuts like now, which is complete BS if you think about it. So I think it's probably going to be close to 4. And then once President Trump gets in, this dude is all about, hey, he said it yesterday, rates are too high. He's going to jawbone the shit out of everyone into getting these rates lower. Now, how is he going to do it? Well, number one, the Republicans have actually come out. If you search this in the news, Republicans actually called this out this year saying, hey, listen, the BLS data is bullshit. And we see it's bullshit. Like, how the hell is this? How does this happen? So when the Trump admin comes in, they're gonna have that revised BLS number, and then they're gonna say, look, there's gonna be a huge revision downward. So right here, key Senate Republicans press agency on. I mean, dude, you can't freaking miss by 800,000.
Why is this? What is this? Why do you think they're overstating by 800,000 jobs?
To make the economy look rosy. To make it look like everything's good. I mean, it's a political thing, man. Like, this is the problem with politics. When people become overly political and trying to justify their party's whatever their performance, they're going to use flawed data. The bias eventually creeps into the data. And then once the data creeps in, it's like 2016. Remember, everyone said Hillary was going to win, and then Trump won, right?
Yeah, no, I think you're right. So then the question is, Trump wants to get rates down. Trump needs to convince Jay Powell that the data is fake. So you think Trump's going to create, or Republicans in general, a new methodology to actually quantify how many jobs we truly have?
I don't know how the Republicans are going to do it, but the ADP numbers are what I'm looking at, because the ADP numbers are actually based on real payrolls, right? Like real actual payrolls. It's not based on, hey, how many jobs openings do you guys have? I mean,
Wait, so is this bullish or bearish for the market? What do you think?
It's bearish in the face of everything, because what happens is the market is going to look at the data and make bets based on that, right? So they're going to say, well, look, I think the 10-year is going to stay elevated. So that's why people are like, I'm going to sell the 10-year, right? Which is why it's at 4.7. But for the investor, if you want to be smart about it, you buy, you eventually get to the point where you buy long duration yielding assets, so that this way you can be a counter to that. And that's where the value really is,
So Thomas says Jay Powell already knows the data is wrong. What would you say to that? Thomas says Jay Powell knows that the BLS is lying.
This is the problem. He's stuck in politics. He can't do that. He can't say, well, I think the government numbers are wrong, because he's supposed to operate with government numbers, because he is a fucking government official.
That's true. He can't come out and say that he thinks the data is wrong completely, because he's constantly saying we're data dependent. And so if all of us have the same public data, not the, I'm going to go through this rabbit hole, try to find the real data, the actual public data that's available, you have to act on that. And that's why, do you remember at FOMC, every reporter was like, why did we cut rates if unemployment is fine?
Yeah.
And he had to say, well, we think it's weak. But the reporters are like, wait a second, but we have plenty of jobs. What do you mean it's weak? And so I agree. It's going to be tough.
Powell, okay, so let me just be clear. Someone said Powell is not a government official. Look, the central bank is it's technically not part of the U.S. government. It's an independent entity, but its oversight comes from the government. So it's like a GSE, government-sponsored entity. So the government essentially does all the ups and downs. Otherwise, you wouldn't have congressional hearings sitting there with Jay Powell. So at the end of the day, they're still government employees, indirectly. So,
yeah. Okay. Yeah. So that is bearish short term, but once the truth comes to light, you think we get rate cuts and then markets basically get more excited about the actual data?
Well, it's going to depend, right? It's going to depend on which industries you're looking at, because some industries that are more capital intensive, they're going to take the nasty hits right now. Like, we're looking at all these companies that are outside the US. They're suffering because of strong dollar. Right. Same thing with a lot of the businesses that we have here. I bet you a lot of earnings misses are on the way. Okay.
Really?
A lot.
You think Q4? You think they're on the way?
No. This quarter. Well, not this quarter, maybe Q2 and Q3. Because with a strong dollar, all of a sudden now every earnings report, you're going to have to account for currency headwinds. Right?
Yeah.
If you signed a contract in the local currency and you're getting paid in local currency, when you do the conversion back to the dollar, you're not going to see a great reflection of that. So what ends up happening is your year-over-year growth number looks poor, right? Because basically the goods and services that you sold were sold at a local currency. Yeah. And now, where last year that currency had a little bit more appreciation and the dollar was a little weaker at the time, so you got the benefit of that. But it's literally currency headwinds are going to be a problem for some companies. But it also means that, and I like the strong dollar means my U.S. equities in Great Britain are worth even more. Yeah, that's true. It depends on the way you look at it. Wherever you're working, strong dollar is good for people that literally are U.S. employees that are working overseas, because now you get to spend money in their currency when you do the conversion. Bro, we should go to Japan, man. We should really go to Japan.
Dude, first of all, I want to have actual sushi in Japan. Has anyone been to Japan in the chat and had real sushi? Like, I feel like this needs to happen soon.
Yeah. Japan. We should go to Japan. We should go to Brazil. Brazil right now has currency issue. We should go to Colombia. I was watching something on Twitter that I saw, like some random like cheerleaders dancing in Colombia. I'm like, man, I need
I
to
know
go
you were
experience
watching
that.
someone dancing in Colombia. It wasn't share. It was definitely something. I know what you were watching.
Yeah.
Colombia is a
So
fun place from what I've seen on
yeah,
Twitter itself.
Costa Rica, El Salvador. You know, like right now, if you're an American, you got the benefit of the strong dollar. Go out there and enjoy, man. Get out there, spend some money.
And that might be a tailwind for the grabs of the world. Obviously, the new banks, Mercado Libre, once that dollar
Yeah.
starts to come down, definitely for grab in terms of tourism, that would be bullish for them as well.
Yeah. No, I mean, a lot of them are suffering under the weight of the strong dollar. So it's just one of those things. The good thing is we're flushing out this first quarter. I think the first quarter we have to deal with this volatility, right? And I hope the market drops by at least, like every year, you're going to have at least a 10% correction and then a move higher, right? If we get this nice 10% correction out the way, bro, that would be perfect because now if we buy at the bottom, by the end of the year, we're up another 10 on top of it. We'll be up 20% again. Remember? Like,
I would, if we have to get a 10% correction, let's get it done in the next 2 months. Let's not do it in like June or December,
yes,
right?
exactly. Exactly.
If it's coming and we got to take it, like, let's just get it over with and move
bro,
on.
I want deals. I got cash. I want deals, baby. So if I see great companies that are oversold based on just technicals and some of this fake ass bullshit that's coming out of, I'll take it. I'll take it all day. I mean, you remember in August when everyone was saying, look at Tom Lee, thank God for Tom Lee. He said, look, the numbers that you're seeing are all based on the hurricane data, right? Like, don't trust that data. You remember that when everyone was selling? And some people were like, no, we need to be bearish. We need to stay on it. Like, carry trade is going to be absolutely crazy. Bro, we made most of the money we made last year, Amit, was because of August. Okay. Like, I made okay money up until August. My portfolio jumped a hell of a lot because I was able to buy that dip.
Yeah, and I think most people that have like been in markets for a while, they wouldn't, like, even the Pouncer Bulls that I talked to, I mean, like, they're not going to be upset if this thing goes to 50. It'll be annoying, but they've been waiting for an entry because 40 to 60, that run happened like within a couple of weeks, and it just, no one was able to get an entry. I think most of the Tesla Bulls, they'd be annoyed if it goes to 320 again, but they wouldn't be upset. So like, deals are good, especially if you're going to be in the markets for the next 2 decades. Question is trying to get them at the right moment. And August 5th was just such a layup for most people. This one might not be as easy.
Okay, so I'll give you one thing that I think a lot of people that are being really bearish. So a lot of people are looking at the overall S&P 500 and the valuation of it. Can you go do me a favor? Go to Yardeni Research.
Yeah. Okay.
Okay, share your screen real quick and let's take a look at it together.
Charts.
Okay. Yeah, go to the charts. Go down, scroll down, look at the S&P 500, right? No, scroll up. There you go. Look at the S&P 500, 400 to 600, that thing right there. Yep. Just go to the S&P 500. Click. Actually, no. Sorry, go back one. Go to scroll down. You should see just the mega cap 8. Scrolling right there. So click on that. Go to mega cap 8. All right. If you go down, the first thing we're looking at is the mega cap 8 and how they've basically performed. So keep scrolling in terms of total market capitalization. Okay. So if you look at the S&P 500, it's been on a upwards movement. But if you look at the percentage of the S&P 500 that's concentrated among just these 8 plays, it's very similar to how we had like the Nifty 50 in like the 50s. So right now, valuations are more correlated to how the S&P 5, I mean, not so much the broad index, but they're basically correlated more to the movements of those specific companies, right? So if those specific companies rise really fast, the S&P 500 grows really fast. If it grows really low, it comes down really low.
Essentially, these companies are the market.
Basically, like, I mean, they're almost 30, like right there, 33% of the total market, right? Yeah. So keep scrolling down. Keep scrolling down. Let's keep scrolling. Okay, right. No, higher up. Up. So right there, the price to earnings. First we want to say price to sales is fine, but let's do price to earnings.
Price to earnings is below right here. Yeah.
Right. So this is price to earnings on a forward basis, right? So the peak that we saw in 2021, right, for the mega caps was about 38, 39. But if you look at like the S&P 500 at the time, it was also up in the 30 something range at the time. Okay.
Huh.
So one of the things that's happened is the market went down. So so like basically the mega cap 8 went down significantly. That's why we had that giant sell off, Meta down to $80, Google down to the I think they're the hundreds. You know what happened basically. So the entire market took a crap. Now the recovery primarily that we saw the last 2 years have been coming from the mega cap 8, as they have really, really outperformed and their margins have expanded significantly. If you scroll down further, you're going to see keep scrolling. Okay, that's price to sales right there. So look at the profit margin jump on the mega cap 8 companies. This shit went from 18% to almost 26%, close to 26%. That's a huge jump in profit margins, right? And they've used those profit margins to buy back shares, which means that their market caps keep growing and all this other stuff. On the other hand, if you look at the profit margins on the rest of the market, it's also expanded, but it hasn't gone up a lot, right?
Nowhere near the level that the Mag 8 did.
Right. And if you scroll down further now, right, you can see that if it wasn't for the Mag 8, the market hasn't really gone up that much compared to 2021 when we had the quote, the upward bubble thing, right? So if you look at the red line is the S&P 500, but the green line is the S&P 500 minus the mega cap. So basically, we
would have been flat if we didn't have the Mag 8 over the past 2 years, basically.
Correct. Exactly. Now keep scrolling down. There's one more data point. Okay. This is forward earnings, which is fine. Keep scrolling. There's one last thing I wanted to show you. Keep scrolling. There should be one more time. No.
Stock.
Keep scrolling.
That's it.
Okay, there's I forgot where they keep the chart, but basically, if you look at on a forward basis, price to earnings on the mid caps and the small caps, they're not nearly as expensive. So they're not in the 30, 40 range. They're in closer to the 20 range. So if you go to the .com bubble, the entire market was trading at crazy multiples, like 20, 30 something, right? This time around, the concentration of that forward PE, like that giant PE expansion, has basically been concentrated in the mega cap 8. So this is not to say that the market can't correct with a bubble, deflating. But it just means that we're not going to see like a 2000 kind of giant move down, like a 30, 40% crash.
So explain this again. So for those that are convinced that we are in .com 2.0, your argument is that the Mag 8 make up so much of the S&P 500, and these are actually real companies, that even if we get a drawdown in them, which AKA is the market, it is very difficult for it to be the 80% drawdown we saw.
Exactly. So these are not fake companies. They're really legitimate companies that make tons of cash flow. So anyone expecting like a 30, 40% crash in the market, I think the meet Kevin is really uber short on the market because he thinks that everything is going to go down. I don't think we get that. I think the most we get is probably another 10, maybe 15% correction if things really the shit really hits the fan. And as far as you know as well as I do that multiple 10-year 10% corrections are normal. I've seen the market correct 10% more than a few times. So yeah, if the opportunity comes where you can buy great companies at a 10% drop that's not related to the actual business operating, bro, I think it's a good time to buy. So right now I'm looking at S&P. It hits 5,600. It's time to look at it, and it's getting close. It's getting close to almost 5,600,
So we're basically 10% away to get there.
Yeah. Not 10. We're less than 10% away from getting there. You know, because the all-time high was 600. What was it?
Oh, you're counting it from 6,000. Got you.
Yeah, from 6,000. So it just needs to get to like 5,600. At 5,600, you should be looking at opportunities where there's great companies to buy them, especially if they're growing their earnings, if their margins are expanding. You know, and at the same time, if you think that there's going to be more rate cuts in the future, those companies, especially among the small and mid caps, which are a lot more influenced by interest rates, those will be great companies to be in. And you'll actually see a nice move up as basically the rest of the market is catching up to the mega caps.
Yeah. Yeah. And I think, so what is your narrative? What is your thesis on people that say AI is fake and that it's not going to give the productivity gains that we're hoping for? How do you reconcile that? Because if we don't get real productivity, I feel like the market sells off a lot of AI names as well.
So this is the part that, like, I can only speak to my own personal experience with regards to AI. Like, I have actually started to use AI products. Like, okay, one of the products that's new that I really like is something called Notebook LM. Like, I use Notebook LM from Google pretty much. You know, like when I'm doing a lot of analysis that I need to break down, I'll use Google. Like last night, I wanted to get a really good deep dive on Nubank, right? Now, the thing is, I didn't want to listen to 30 different podcasts. So what I did is I uploaded the podcast that I really wanted to listen to. I uploaded a bunch of earnings reports. I uploaded, and I just literally let it do its audio briefing.
It can do that? I don't know it could do that.
Bro, it's awesome. It's freaking awesome, dude.
You can upload documents and it just turns it into a podcast for you.
You can upload documents. You can upload YouTube videos. You can upload websites. You can upload SEC filings, and it does the entire analysis for you.
Gotta buy some.
I was showing this to Steve, Matt, bro. They love it. I don't know if these guys are in here, but dude, it's awesome. I really like if you want to get all this data and just crunch it into some simplicity. Bro, this is the perfect thing, man. This is the perfect thing for it.
Yeah. So okay. So your experience is that given you're using this now, you think this is a promising feature of how unbelievably transformational this.
Yeah. And all these other tertiary companies, they're also developing AI products that complement their already existing services, right? So here's an example. Like I use a payroll software. I used to use a payroll software called Paycom, right? Paycom has this AI assistant called Betty, right?
Betty is her name?
Betty. Yeah, it helps you with, with payroll related things. Like Salesforce, they're trying to invest in agents right now so that this way, that's less people that you have to interact with, right? So a lot of AI is actually being used. The question is, where is the value coming in? Like, who is actually making money on this? So in my opinion, it's actually Amazon, Google, and Microsoft, because they own all of the infrastructure that makes this happen, right? So anytime you connect to an AI by, let's say, a third-party company, they're all connecting to a model, right? So right now, if you use Palantir, you're probably using Google. You're probably using OpenAI because those are where the models are. Right. So the storage of your data stays with you, but the compute and the AI model and the tokens, they all come from these guys, from the Amazons of the world and the other ones. So, yeah.
So, okay.
And NVIDIA provides the hardware. That's the other thing. NVIDIA makes money on the hardwares. So it's basically NVIDIA designs the chips, sends them to TSMC. They make the hardware. The mega cap companies like the hyperscalers, they buy the shit out of these GPUs, put them into their data centers. So now the business model is almost like real estate, right? So the data centers are like real estate. Every time, that's why these guys are willing to spend $80 billion. Like Microsoft said, we're going to spend $80 billion. If they didn't see the demand for this compute, they wouldn't be building a data center, right?
No, I agree, which is why, look, when I listen to the bears and they go with the AI is fake angle, I'm like, okay, so there's a lot of angles to be bearish. That angle, although there might not be as many promising use cases yet, it's really hard to say it's fake or it's just a full-on bubble, because the internet wasn't fake either. It was just a little too early in terms of the bubbly stocks. But then you can't say that argument for Amazon, Microsoft, Google, because they're not fake companies.
Right. When the internet bubble happened, the internet was not fake. Everyone knew this thing was actually going to be somewhere. The problem is you had diapers.com. and people were willing to pay $100 million for diapers.com,
Yeah.
right? That's the challenge. And it's such a big challenge that one of the things that because I work in technology. So one of the things my organization has now is anytime someone comes to sell you, like a vendor tries to sell you an AI product, essentially what they're doing is they're saying it has to go through them, because they'll actually identify if it's real AI or if it's just machine learning, right? Because everyone right now is basically touting like, oh, our software has AI built in, and it's like, no, you don't. You just have ML, bro. You know.
Yeah, and that's what I'm saying. I think some of the losers are going to get cut this year, because this year is going to be a year where like we really need to see progress. But the ones that do show progress, I think they're going to keep getting a higher premium.
The question that we should be asking is which companies are going to be disrupted by AI, right? Like the Adobes of the world. I mean, Adobe's fine. It's a great company, but at the same time, if you're dealing with, you know, LLMs that can generate pictures and all this other stuff, and you just need to, you know, manipulate some of the prompting to get the end result, like how are you going to basically survive? I don't know. This is the fun part about technology, where when new technology comes, it disrupts things. Like here's an AI use case. That's a real AI use case. Cars, like autonomous cars. Now you're seeing autonomous cars everywhere.
Yeah.
Right?
Yeah.
Why? Because of AI. You could actually, that's a real use case for it. Robots, like you saw with Jensen, they were like, how many robot companies were there representing?
15 of them. Yeah.
15 robotics companies that are saying, look, we're using generative AI in our robots. I hope that those robots don't fucking become sentient and try to kill us, though. You know, I'm always worried about that. But this is where things are, man. So deep learning, not machine learning. Yeah, whatever, man. I'm just saying this is where I think there still is a large amount of use cases that are going to be coming out. The question that we should all be trying to figure out right now is who's the next Facebook, who's the next Google, who's the next Amazon. Because remember when the internet came out, could you have imagined in 1999, like, hey, you know what, I'm going to buy this search engine company because that's the company that's going to be the biggest, you know, one of the biggest companies in the world? Like, no one knew that. Amazon, no one knew that. So right now is the time to figure out who is going to be the biggest beneficiary of AI, where they come in, they disrupt everything, and they make a killer product, a killer application, whatever, that's going to basically disrupt entire industries, you know?
Okay, so then in terms of this year, and I know you've been saying it, but your biggest bet this year is still Google. You think this one is going to be the one that has the cash flows, the moat, and the buybacks to really take it to the next level?
Yeah. And at the same time, one of the biggest concerns that Google had was around getting broken up by the DOJ.
Oh, yeah, that's done.
And I think that's going to be done. It's so done that I don't know if you saw the interview with Lina Khan, where Lina Khan was like, I hope the Trump administration does go after these guys. Like, shut up, bitch.
You should apologize right now, because your wife's gonna hear that and she's gonna be like, Chris, you were not supposed to say that. But
whatever, bro. Me and the couch are best friends at this point. All right, I can sleep on the couch all day, every day. I don't care. I've gotten to the stage in marriage where it's like, go sleep on the couch. Okay, whatever. You know,
nice little pillow there waiting. It's like, because your wife watches these. She likes it when you get on the show. She watches, but she'll call you out. You know,
bro, I've slept on the couch so much. I've got like an indent where I put my left butt cheek, and it fits perfectly. You know, like you just know you're gonna get into that comfy zone. You know, so I've got like a position too. So I'm good.
All right, there you go. Chris, thank you for joining again. Chris's Twitter right here in the chat. If you are not following Christopher on Twitter, he's at 16.5 thousand. We should try to get him to 20,000 pretty soon. So if you are interested in market commentary or any of that stuff, please follow Chris, and we'll talk to you soon.
Later, guys. Take care.
Later. Take care.